Good morning, everyone. It is Wednesday, September 15th, 2021, and we're going to get started with our pre-market analysis on the S&P 500 futures market. Real quick, what I'd like to quickly do is, show you guys some of the levels where the market turned yesterday, which happen to be important levels that we have mapped out on the charts. Now, I have removed all the important levels that we follow here, simply because they're somewhat proprietary levels that we want to give out to only our members. But I do want to show you a few key areas where price came right into our eye level and reversed. And that happened yesterday right here, right around 6 a.m. We got another push into our next eye level here right around 6:30. Got a great sell-off from there, came down, came up and tested the back end of a level we had up here, came down, bounced off that eye level, use it as resistance over here, and then you can see over in this area, directly off our important levels, a pullback from there, a bounce from there, pullback from that important level, came all the way down, if you guys remember, to about midday, got this really strong bounce right here, right off another eye level of ours, and then came up and found resistance right at the back end of another eye level. And that was kind of the major turns in the market that coincided with the levels that we kind of map out on our charts and use every morning. So figured I would show that really quickly. Let's go ahead and jump up to our ultra high time frames. Take a look at the whole picture, see what the charts have to say this morning. On our quarterly here, still looking strong, no signs of exhaustion. Monthly, same situation, and weekly, same as well. We did not get a very strong bearish indication up top here on the weekly chart. Now, when we dial down, again, we talked about this for the last week or so. We did get the bearish indication on the daily chart, which, as we've said, can lead to 100, 200, 300 point pullbacks. But with the correction we're seeing right now, still didn't have any indication of that on the weekly chart. What we're seeing right now is this bullish potential divergence that we're seeing off the lows of the current weekly candle. And now you can see we did come down a little bit lower. Remember, we said that we can push another 100 points down to meet up with the previous low of this candle back here that closed on August 20th, and we'd still have, assuming that the RVI looks like this, we'd still have a bullish divergence. So for now, we're going to have to continue to kind of redraw that to the new low, just because that's the nature of the beast here. Let's go down to our daily, and same thing on the daily. Like we see on the weekly, we kind of have to continue to redraw this signal until it actually officially forms and we get an actual turn. So maybe today, this will be the day. We'll see what all the other time frames have to say about that. But it could be that coming into today and on this new candle for this morning, when this closes at the end of today and RVI closes, say, up like that, then we'll have a nice peak down here, and then we will actually have the signal. But like I said, sometimes what happens is you have this continuation in RVI, and you have this straight line, and then eventually it makes the turn. And so if you have to continue, you're basically going to have to accept the fact that sometimes signals are false, and no matter what system you're using, you're going to get false signals here and there, depending on what you're looking for. And in this case, we did talk about there was, I think, a potential of a bullish divergence back on the 10th. We talked about the potential of a bullish divergence off the candle on the 13th. And now it looks like, and I warned you guys that there's still the potential, if this RVI continues to push down, we're going to have to continue to follow through. So now you can see off of yesterday's candle, same thing. We pushed down. Now we're getting what looks to be maybe the peak there, right? But we'll just have to see we'll have to see what happens today with this candle. What we can say is currently, again, it could be a false signal, just like the last two candles. But currently, we do have a bullish divergence off the daily low. the previous daily low on the daily chart here. And this is the same situation, which is what I was saying with the weekly. You can come down another 100 points to that previous low. On the daily, we could do the same thing, and we could continue to chop down until we get to this low down here, which is another about 100 points down. And that's just is what it is. That's just how it is with, if you're looking for signals using divergence and RVI. Sometimes that is just how it is. So we have, for now, we have the bullish divergence off the previous daily low on the daily chart. We go down to our 4-hour, and from a 4-hour perspective here, we do have the bearish signal from the previous daily high. We also have a bullish divergence off the previous daily low, and then we just got a bearish divergence here in the overnight session off the overnight high. So unfortunately, this is probably going to look like a very similar morning to the way it looked on Tuesday and on Monday. At least that's how it looks so far. Let's just, we'll have to continue to dial down and build the case here, and it very well could be very similar. So let's look at our hourly here, and the hourly did have a nice bearish divergence off of the previous daily high. On the previous daily low, there actually is no divergence down there on the hourly chart. Now, if we do see it on every other time frame except for the hourly, that can be ignored. That this time frame can be ignored, and we can accept what every other time frame is saying. So we'll have to look at the 2 time frames below this. But the hourly does not have that bullish indication off the previous daily low. It does have the bearish signal off of the overnight high right now. So think overall, if we were to tally everything up, there actually are more bearish signals this morning because we're missing that one bullish signal on the 60-minute that would balance everything out. So let's go down to the intermediate time frames, see what they're saying, and then try to put it all together here. I think the 10-minute, hopefully okay. So on the 30-minute here, nice bullish divergence off the previous daily low, nice bearish divergence off the previous daily high, and currently there actually is a bearish divergence off the overnight high as well. So pretty much everything is in agreement except for that one 1-hour time frame did not show the bullish divergence off the previous daily low. And finally, on the 10-minute, 10-minute had a really nice bullish divergence down on the lows here. Pretty decent bearish divergence, not at the extreme high of the previous day, but on the retest. So it pulled back, it tried to push back up, came a little bit short, and then they sold off from there. We do have that bearish case from there. So essentially the same exact situation, bearish off the previous daily high on the 10-minute, but bullish off the previous daily low and bearish off the overnight high. Unfortunately, that's what we got. we have kind of an ambiguous situation. We don't have 4 or 5 time frames all showing one direction here. We have pretty much every time frame showing conflicting signals. So that makes things a little bit more difficult for a strong bias one way or the other. Of course, in the general scheme of things, we are selling off here, right? Obviously, we've got this kind of this trend lower. So you kind of have some kind of channel here. I don't know, the best way to draw this right now would maybe be something around this, somewhere. Oh, let me redo that. Somewhere in that general scheme like that. So we are in this downtrend, and what I'd like to do is kind of zoom out a little bit and take a look at the whole picture. So we talked about this. In fact, if I bring up my higher time frames here, we talked about this leg. So when we zoom out, we talked about pulling back right to this previous resistance, which happened to also be 50% of this whole push up. They did come down, break it by 2 or 3 points there, and then get a pretty decent bounce out of that area. You know, 44.80 coming off of, so 40 points if you just got in at the 50%. Not a bad push higher. And then you can see they continue to come lower as of yesterday. Now that 61.8 we talked about at around 14 to 15-ish area right there. And then this previous resistance in the market, just a few points below the 61.8, does look pretty ripe as well, around 04 or maybe 43.95. So we've got a couple levels below us that still would make sense for some type of support. And remember, holding above around the 61.8, the 75% retracement of a leg is a bullish indication. It's not really a strong case for bulls. It's just giving you one more piece of information that is somewhat bullish. So holding above this general area, maybe 44.95 or above, is a bullish indication. And then we'll have to see if there's any type of follow through. So we have those levels below us. If they do break below the previous daily low, which was at 44.25 quarter. And then to the upside, I think I'll just go down to my 30-minute here, and we'll look at overall some pretty strong support right off of 50% of the previous day. So 50% of the previous daily high, previous daily low, it's right there at 44.52 quarter. You can see a really strong support at that level back at the end of August. So it came down, bounced. We haven't really come down below it and then tested it cleanly. You can see that we actually found support around that area multiple times over the last few days. Did break through here, but basically 1, 2, 3, 4 strong tests of that level, and then we broke below it. So potential for that to be a little bit of resistance. And then conveniently, the previous daily high, where we did have all the bearish indications on every time frame, we do have a really strong support area. In fact, if you look back, you can see that that general chop area between 50% of the previous day and the previous daily high there, pretty good little area of consolidation, I guess you could maybe call it. So coming back up into that area could be potential resistance, not only because we had a lot of bearish signals there back from the previous daily high, but really good support from these previous days in the market, and arguably pretty good resistance in this general area, although it's not quite as clean. I mean, we're talking about a range from 79 up to 88, so still 10 points there, but that could potentially be some trouble for the bulls. And then we can take a look at the overall retracement of the whole leg from the all-time high, which was, I think, 45.40 on the new December contract here, down to the previous daily low at 25 quarter. If I could get that, we'll just go ahead and print it there. And well, interestingly, 50% of the whole push down lining up with the previous daily high and all the support and resistance we talked about right in this area. And then 61.8, I would argue maybe if they don't use it to the tick, they might push just a little bit further to push up into this area of support where we had resistance and support right around 03 to 04 there. Market came up, resisted, then came down and got some support just in front of it, and then support again there, and then it became resistance. So right around 61.8 at 96 up into that 03 area, another area of potential resistance for this morning. So just to kind of sum everything up real quickly here, ultra high time frames look very strong, no signs of exhaustion. When we get down to our daily chart, we do have the potential of a bullish divergence off the previous daily low. We do have also the possibility that continues to follow through. I don't like how wide the spread is for the divergence. And then we get below the daily, and it's pretty much just kind of all ambiguous. Bullish off the lows, bearish off the highs, giving us some conditions this morning. So breaking above 50% of the previous day, holding above that is our first bullish indication for the day. Getting through the prediction point, getting through the previous daily high, that is going to give us a lot more confidence in any type of bullish move this morning. And then, of course, breaking lower, we talked about levels below us. We have our eye levels, which are not on the charts right now, but we will take a look at those for our members. And we also talked about potential deeper retracement levels. So I will leave it at that. It's another morning where things are not giving us a clear picture as to direction, and that's really the main purpose of why we do the multiple time frame analysis, is to find the confluence and the picture on those days when it becomes very clear. But this morning we have what we have. 44.42 quarter is 50% of the previous day, or 50% of the previous 4-hour candle. Another really good line in the sand for the bulls. So breaking above that, holding above it, and then breaking above 50% of the previous day and holding above that. These are both good signs for the bulls. Of course, anything is possible. They could peak above this stuff and then have some type of violent sell-off. But that's why we have our eye levels and our signals to rely on, and we can be nimble if we need to be.